$60.50. That's the cash offer on the table for every share of PayPal from Stripe and the private equity firm Advent International. So why did the stock close Thursday almost $4 under that number? What's up, guys? Coach B here. This is the breakdown. Quick reminder before we get into it. This is education, not financial advice. I'm not telling you to buy or sell PayPal or anything else. PayPal is just our teaching example here, so do your own research. Here's what actually happened. The offer was submitted earlier this month, and Reuters put it on the wire after Tuesday's close. Stripe and Advent International teamed up on a joint all-cash offer for PayPal, $60.50 a share, valuing the whole company north of $53 billion. They've got roughly $50 billion in committed bank financing lined up, real money already arranged, not just a number on a press release, plus about $17 billion in equity from Stripe, Advent, and Block. Stripe and Advent would split ownership 50-50. That's about a 28% premium over where PayPal closed the day before the news broke. And here's the part that matters most for everything we're about to do. PayPal has not responded to it. Put Stripe and PayPal together, and you're talking about something like $3.7 trillion a year in combined payment volume moving through one company. Deals that size don't just sail through, they get real scrutiny, and that scrutiny takes months, sometimes longer. That size is exactly why regulators are a real risk here. US and EU antitrust review both. But regulators aren't the only way this doesn't land at 60-50. The price itself is a live argument too, and that's the other risk we need to look at. Now look at what that news did to the stock. PayPal closed Tuesday the 14th at $47.37. On the deal news Wednesday, it closed at $55.52. That's up $8.15, about 17% in one session on 91 million shares, almost 6 times normal volume. Inside that one session, it opened at $54.85, dipped as low as $53.44, ran as high as $55.88, and settled at the close $55.52. That's a stock getting repriced in real time around a takeover number. Buyers and sellers fighting over where this thing should actually trade before it's even close to a done deal. Then Thursday, it kept climbing. PayPal closed at $56.73, up another $1.21. So that's our starting line, Thursday's close, against a $60.50 offer. So here's the gap you actually have to explain. The offer is $60.50. The stock closed Thursday at $56.73. Do the subtraction. 60.50 minus 56.73 is a $3.77 gap. Now turn that gap into a percentage. Divide 377 by the stock price, 56.73, and you get about 6.5%. Now run the math the other way. If it breaks and PayPal falls back to where it traded before the bid, 47.37, do that same subtraction, 56.73 minus 47.37. That's a drop of $9.36, about 16.5% down from Thursday's close. 6.5% up against 16.5% down. That gap is not free money sitting on the table. And here's where the logic usually goes wrong. It's tempting to say the whole gap is break risk. The odds this thing falls apart. That's part of it, but it is not all of it. Even if this deal were a lock, the stock still would not trade at 60.50 today because you don't get paid today. You get paid whenever it closes, and your money sits there until then. So that gap is break risk plus time plus whatever your money could be earning somewhere else. And the chance somebody has to pay more to get this done, that's part of what keeps it from falling any further. And not everybody agrees on which way this breaks. William Blair kept a market perform rating on PayPal and said if 60.50 is just an opening salvo, Stripe and Advent could go as high as $70 a share. But that same firm said it's hesitant to chase the stock up here. And do the arithmetic yourself. 60.50 prices PayPal at about 11 times its trailing earnings of $5.33 a share. Michael Burry, who owns PayPal stock, said flat out he believes the bid will have to rise. So both tails are live here, up toward a higher bid or down if this whole thing falls apart. That's the kind of split you want to notice because it tells you the 60.50 number isn't settled in anyone's mind. Compare that to a normal earnings move. Most of the time, a stock like this reacts to one number, a beat or a miss, and then the chain reprices around wherever it lands. A deal is different. Here, the stock isn't trading off what PayPal earns. It's trading off what Stripe and Advent will actually pay and whether regulators let them pay it. That's why the stock doesn't just jump to 60.50 and sit there. It sits below it, pricing the odds of the deal itself, not the odds of a good quarter. So how do you actually put a number on those odds? You look at the options chain and you use delta. Here's the ladder. Expiring August 14th, the 50 strike call has a delta around 0.852. The 55 call is down to 0.637. The 60 call is way down at 0.345. And the 60 put on the other side is at negative 0.662. Think about why that keeps falling. Each strike needs the stock above a higher bar by August 14th. 50 is already well below Thursday's close, an easy bar, so a high delta. 60 is about $3.25 above it, a much tougher bar, and the delta drops to match. Walk that ladder, and you can see it plainly. The further above the stock price you climb, the lower the delta gets. That's the chain telling you the odds get longer the higher you reach. That 60 call, the one nearest the actual offer, is trading around $1.44 last, delta 0.345. Delta's a rough stand-in for the market's odds that option finishes in the money. A delta of 0.34 on a strike sitting a little below the 60-50 offer means the chain is pricing something like a 1 in 3 chance PayPal is trading above $60 by August 14th. Now, that's not the exact same question as whether the deal closes at 60-50. $60 is a little below 60-50. So trading above 60 is actually a slightly easier bar to clear than the deal itself closing. And delta is an approximation, a rough read off the option's price, not a printed probability anybody guarantees. But it's the closest thing this market gives you to an actual number on the odds. Now put the calendar on the table because this is where the time part gets real. PayPal's board is set to meet as soon as July 20th to take a look at this offer, and Stripe and Advent are targeting an agreement before the end of July. That's the signing clock, and it's measured in weeks. But signing is not closing. U.S. and EU antitrust review is the closing clock, and that one runs months, maybe longer. 2 different clocks, and only one of them has dates on it yet, and there's one more date on that calendar. PayPal reports earnings July 28th. And that lands right inside this same August 14th expiration. So that 160 call isn't pricing one thing, it's pricing 2. It's pricing whether this deal is still on track, and it's pricing whatever PayPal's business actually did last quarter, completely separate from the deal. 2 separate events, landing inside one expiration, both baked into that single number on the chain. That's worth remembering before you ever look at a premium on a chain like this and assume it's only about one story. So how would you even think about this? An arb trader is watching that 377 spread and asking if 6.5% is worth the risk. But notice that 6.5% has no closing date attached to it. The board meets July 20th. An agreement might land by the end of the month, but nobody has told you when this thing actually closes, so it's not an annualized number. Someone looking at that 60 call is betting on 2 separate things landing by August 14th, the deal staying on track, and the earnings print both inside one expiration. Neither one is a recommendation. That's just how different angles read the same setup. So let's recap. $60.50, a cash offer worth more than $53 billion, and PayPal has not answered it yet. PayPal closed Thursday at $56.73, a real gap underneath that offer. About 6.5% upside if it closes, about 16.5% downside if it breaks, and that gap is break risk plus time, not break risk by itself. On the chain, delta falls the higher you climb the strikes, and the 60 calls delta of 0.345 prices something like a 1 in 3 shot PayPal's above $60 by August 14th, with earnings landing in that same window. Quick reminder again, this is education, not financial advice. I'm not telling you to buy or sell PayPal. Do your own research. If this kind of breakdown helps, seeing how real deal risk actually shows up in an options chain, subscribe, because that's exactly what I'm doing with the next hot name on the board. And drop your questions in the comments. I'll get to as many as I can. Good luck in the markets, no matter what stock you're into.